Don't forget that.
Starting off rough. It's been 6 weeks. Audio coming in late. Market Vitals. MarketVitals.io, the site. Market Vitals, the stream. HFR, currently not on the floor, but I am from the floor. Mistrade, Matt Davio. The best profile on the planet. Well, profile trader. I'm not sure his profile is the best. I've seen better profiles. I'm a little haggard, Matt. I'm a little rough around the edges. I've been beaten up and down. 6 weeks on the road, suffering a C7 nerve thing. Can't feel my pointer finger. I'm all kinds of disheveled. But
and Bob, we missed you.
Well, it's good to be missed. I guess, Matt.
We did miss you.
As I come back onto the into the flow here, I was thinking of the adage, the more things change, the more they stay the same. Well, like I pretty much did a pretty good job of unplugging for the past 6 weeks. And when I came back, I got to tell you, nothing seems to have changed. The world still seems fairly upside down. Anyway, it was nice to be away, and it's nice to be back.
Well, and not only is it upside down, I think it's just they're holding everybody by their ankles and shaking the change out of their pockets. So upside down.
Well, for sure, and we're going to get to the charts here. For sure, there has been, from my perspective, a developing major change in tone in this market. And I'll get to that when we get to it. But first, Matt, let's give a little congratulations to Canada and electing for a third term their black premier. What is he? What is he? Not a premier. Prime Minister. Yeah.
Prime Minister.
Canada. Three-time Prime Minister now. And I just wanted to bring that up because in contrast to our fearless leader, I saw this and I thought this was awesome. The Joe Biden corn maze, 2 stalks, enter and exit. Hey, congratulations, Joe. You made it through the maze. He seems to be falling apart by the bracket. We used to say that about clerks. This kid's getting dumber by the bracket. A bracket was 15 minutes on the floor and there'd be a beep every 15 minutes. And you had to change, what bracket that trade occurred in. Joe Biden completely getting dumber by the bracket as far as I'm concerned. That hasn't changed. But Matt, let's, I wanted to do two things here because
what's interesting story. Though, what's interesting, I have an old dog and him, Rudy, and he is also, he's got a bad cataract situation going on. He's pretty much deaf, but his nose still works, which at least we can say that about Joe Biden. He's still sniffing, little boys and girls. That's about the only thing he's still doing well.
As I traveled far and wide, I spent a little bit of time on the shore of Lake Erie, and every morning the turkey vultures would circle above the house. I was a little bit concerned about it. Like, why are they circling over my house? Anyway, we're going to be able to use this, I think, routinely for the foreseeable future as we push towards some sort of sanity in pricing. And it started with Evergrande here. And I wanted to bring this tweet up, and it was breaking. Sources say that the Clinton Foundation, I thought they were on the planet for good, to promote good in the world, but apparently they're great investors. And Goldman Sachs, both owners of multiple Chinese properties, have been advising the Chinese government on the Evergrande case. Now, Evergrande, for sure, it's been in the news. And if you look at the chart, it's been very systematically trending lower for weeks now. But the contagion seems to have spread. We got a FOMC day today. A lot of people talking about how this contagion might tamper the taper talk. I don't know. They certainly have ran this market back up. We both just sold it, I know. Why don't you bring up the SPOO chart, and then I'll share also my thoughts longer term on what's going on here.
Well, I want to talk a little bit, since you brought up Evergrande, let's just bring up that screen real quick, and you can see that it's been a nice steady decline here after the last, saving rally that we had also off of the COVID low. So even old Evergrande, excuse me, which was struggling, before, is really struggling now. So it did rally back to, what was it, $28, and that high was seen last July of 20, and then now we're trading at about $2. This is a delayed chart, so it's not live, but we got down to about $2. I think was a low yesterday, and like we were talking about, it looks just it's the same game as Lehman and Bear Stearns. Nobody thinks they're going to go to zero, but they will. They can't. I mean, those bonds. I mean, they need like 300 billion just to make the payment or something.
Not only that, I mean, and it's all based on property values, and as
right.
that comes back to reality, it's the most giant upside down position you can think of.
Right.
And so, how much exposure does Goldman have? Because I was going to bring that chart up, but I mean, that is a full island top. You don't see that very often, where there's gaps on both ends of it. And they fought back a little bit here today, but that is not a healthy looking chart.
Well, I mean, it's, again, we got up to 420, we sold off to 370, $50, so which is about 12%. By the way, the S&P was off 5.5 when it hit 4,300. It went to 4293 on Monday, Tuesday, and then it bounced. So we're back to 4,400, which again, the high was 4,550. So we went down 260 points just about, and it's not a huge move, and it's kind of pretty normal, I would say, Bob. And this, let me get rid of this. It is you can again tell that this. I mean, the profile says 200 is value. Again, just like everything, we had this march of the Fed buying everything from November until recently.
And by the way, trading it themselves in their personal accounts, which is awesome.
And of course, you're able to do that too. Exactly. It's amazing. Like I don't understand how Martha Stewart goes away for 2,000 shares of stock that she owned because she knew the CEO, and yet Powell and everybody else can benefit because they know what they're buying. And that seems fair, right? Seems fair.
Rules for thee, not for me.
Right. So again, kind of a interesting, day here, but it's pretty quiet. Like you said, we're marching up. I'll take a look at the SPOOs. We are trading. I think we traded all the way to 4,400 here. Again, a big rally. But here's what I had drawn and shared in the market, profile, or in the market vitals room today. Or I shared this a couple of days ago. Hey, we sold off. We're going to bounce probably up to this line here where we broke, which is somewhere 44.20 to 44.40, depending, because it's going higher as we go in time. So that could stretch up here to 44.40, but this to me is really heavy. I mean, you're in the meat of this profile. We spent a lot of time, not a lot of time, but a few weeks, before we fell at this kind of mediocre level. And so, that's a natural, the low there is like 44, 25, 30. So, again, Fed day to day, we could run all the way up to there and squeeze out some more people. That would be a 130 point move, which again is about halfway back. So when you start having these breaks like this, I think you got to look at the halfway 61.8 areas. Those need to hold. If they don't, we're going to go back up. If they hold, you should go back and at least test. To me, I think we're ultimately trading back here to 41.75 or so, which is another, from where we are today, it's another 200 points, which is another 5%. And if we sold off down, to the low end, gets you really close to 4,000, which again would be a 10% sell. I think that's coming. I think that's going to happen this fall. I think we'll trade back to 44,000 even at some point between now and Christmas.
Let me. I'm gonna jump in here and share the nuance of standard deviation trading, Matt. Yeah. And you'll see this. This is the weekly in the SPOOs, and all of these breaks after the lows put in, the COVID lows. All of these breaks weren't able to sustain enough to change the slope of these bands, right? And this week is not done yet. So these slopes they're active, right? They're changing with the last price. Little nuance. And obviously the week is not done. The story is not fully told yet. So if we trade back higher and put in a green candle, they're going to continue to have a positive slope on the weekly. The thing that's different for me, though, is how much it's changed on the daily. And again, we've had these little pullbacks that have been rejected pretty quickly. This looks like it wants to reject it quickly here, depending on what's said. Even the 3-day, though, it has you see the bands rolling over on the 3-day, fully rolled over on the 1-day, not so much on the weekly. So for me, longer term, this week's action, incredibly important how we finish the week. You can't imagine the Fed's going to say anything to rock the market. I mean, they never have, they never do.
They haven't actually. That's not true. But you'd have to go back to Alan Greenspan.
Exactly. You'd have to get to a emotional exuberance talk. Which was anyway. The market's going to play out, and there's other things that are for sure going on. That I don't know. I'm short. I made some money short. I'm going to stay short. In the chat, Lee is asking, where can we sign up for the Pelosi trading service? For sure, you're ahead of the curve if you get let's face it, the best trading methodology is insider trading. There's no doubt about it, or holding the deck, by the way. And I wanted to jump back to, let me jump back and just show the Goldman chart again from a standard deviation modeling. Because I got to tell you, you don't see this very often, especially in stocks. Let me share it again, because this is a textbook technical analysis island top. I mean, they gapped up here August 6th to the 9th that weekend, and then they gapped down here, and just a giant island top, which is. I'll tell you what it isn't. It isn't bullish to put in that giant of an island top. Anyway, let's get back to some other pressing.
Is it islands in the stream? Kenny Rogers? What's going on? I don't know.
Yeah, islands in the sun.
Okay.
All right, Matt, a couple of things just for our geopolitical wokeness. And let's not forget, I saw the World Economic Forum, or one of those, is going to issue a credit card. Did you see this?
No, I did not.
And I guess it's not old news, and they've been trying to do it for a while. They're going to issue a credit card, and it's going to track your carbon emissions on your purchases, and then it's going to cut you off. Like, wait a second. You're over your CO2 this month. You can't go through In-N-Out Burger anymore. Wait till next month. But for me, the ambiguity, it's not ambiguous. I mean, come on. China's foreign investment in coal power. By the way,
climate change didn't work for the World Economic Forum, so they pivoted to COVID, and that's failing now. Almost 2 years in, it's failing again. Next comes what? What's next? What's next on the agenda? Okay.
Next comes me going outside and clubbing the neighbor for having his lawn done right now when I'm trying to broadcast. The leaf blower, I don't know if you can hear it, but it's driving me nuts.
Nah, can't hear it.
And I think he's over his CO2 for blowing grass and leaves here in Bend.
By the way, NASA back in the, recently, I mean, in 2015, they said that the atmosphere has a CO2 level of 0.04%. So just saying.
I mean, here we go, because I think this is the bigger trajectory, longer term, around COVID vaccines and all of it. And you see it crystallized here among two of the biggest carriers, right? American Airlines saying vaccines shouldn't be required to fly in the US. I know I can't find it, but I swear that I read that the United CEO said that he saw a path forward to mandating vaccine passports in order to fly United. Let's look a little bit at those two charts, Matt, United and American, and tell me what you think. Tell me what you think. What are the numbers saying? What's the price discovery saying about?
Well, here's American Airlines. It rallied off that news, and that this is a short-term chart, right? But it's still just kind of meh. We're within the range. And then if you look at United, it went lower before the news, and then the news hit, and it's kind of bounced around both sides. But again, the old adage, how to become a millionaire and investing in airlines.
You start as a billionaire. Yeah. That's how I made my fortune trading commodities.
So we're trading down here right in the point of control on a longer term chart. This is about a year-long chart that we're looking at. So, it's balanced. This is UAL. So I guess based on the last year, this would be an okay spot to buy it as long as it held 42 on weekly closes, I would say. American Airlines, similarly, just, again, they're trying to get Europe open again. They're saying that hurts their overall business, not having those people come to America. I don't know if they want to. I don't know if they can. I mean, look at what's going on in Australia and in Europe with the peaceful protests, and they're firing off. The Aussie police were shooting the peaceful protesters yesterday, and they were peaceful, with bullets. So in their backs as they ran away from the police. So it's a crazy world right now, Bob. Crazy world. I mean, do you want to try? Do you want to go to France? I don't.
I mean, I just think you have to be cognizant that this is a rolling. I didn't mean to say that, by the way, but when I bring this up, you're going to understand why I said rolling.
But we're not going. The bottom line is here, we're not going back to normal.
No, it isn't, and it's just getting started. In Australia and New Zealand leading the way now because they've been by far the most locked down. All right, and this is from Matt Bauma Higgins, and he's saying it's our turn now, and this is being shared throughout New Zealand. Rolling Thunder Down Under, mass public stand, Auckland, Saturday, the 2nd of October, 2021. All those concerned with the state of our nation, farmers, growers, churches, businesses, families, teachers, nurses, property investors, midwives, tradies, and freedom fighters. Call them the midwives, Matt, and it's not going away. And not only is it not going away, but I don't think you can tell me that people aren't going to make economic decisions around, like, there's no chance I fly United again unless it's the only one flying in the air. That's just me. Yeah. I'll be an American Airlines guy the rest of my life. And that's going to happen from coffee shops to, you name the business.
We were talking about this yesterday. Exactly. If I were a coffee shop restaurant, Phil's Coffee down here in Del Mar, they're all over SoCal, the Phil's Coffee. I would say unvaccinated people are welcome. That's all you got to say. Everybody will flock to you. It's just like, make a point of it. Use it in your marketing, because the people that are masked up are still going to come in because they're masked up. They don't even know what's going on. They won't even see it.
All right, Matt, not a bad first day back. A few glitches. We got some lighting issues.
I want to talk a little bit about Apple, if you don't mind, just because.
Not at all. I saw a great tweet about Apple as you bring it up, and the guy is saying, is Apple is it a camera company because their phone sucks at reception? I don't know.
Yeah, the 12 people haven't been happy about it. I'm still back on the 10, so I'm old school, I guess now. That's a few, probably 4 years old school. But look at this thing. It held right where it should on the profile, right at that 141 level. It got down there, and I said you can cover the new product launch trade that was a sell, right? We hit the all-time high into that, and then we sold off a solid 10%. So we went from 157 down to 141. That's 15% or 10%, almost on the button, and it's bouncing again. But again, half of that $16 move, probably somewhere in that 148 area up in here, and you can see it's going to mirror what's happening in the S&P. So if you want to take more risk, it's the same idea here, but probably look to sell that up in there. Again, if it gets back up into 148, sell some calls, out above that or something like that, just to be involved if in case it goes a little bit higher. But obviously where the stops are now, this is the good thing about markets that start trading two ways. You have even the amateur can figure out, well, I should probably stop if it goes to a new high, right? So it's just think about that. And again, the market has changed. The look of the market, the feel of the market, the trading of the market has changed over the last week. Now,
yeah, I mean, I couldn't agree more. And again, I'll say it again. The way this market finishes the week, I think, is going to be critical for the longer term bullishness. And if they put in a deep red candle, man, you're going to affect the slope of those Bollinger lines, those standard deviation modeling lines. And it's important. I'm telling you right now, it's important because I've seen it too often. Like now you're fighting the trend and it's the other way if you're bullish. And it hasn't been that way for 16, 18 months. I mean, those bands have been sloping up. The other thing, Matt, that let's just jump into quickly, as we're going to both keep an eye on a local favorite of ours that has gone public, Dutch Brothers. Since you brought up Phil's Coffee, Dutch Brothers, just a great little sugar business model, right? So buying sugar for pennies on the pound and selling it for dollars. It's just the greatest model ever. Put a little caffeine in there, and these Dutch Brothers, they figured out like the 2-lane traffic, the double drive-through. And you know, they're going to really kill it if they can just get this if they can start serving. Come on, where is it? This is what I took on my road trip. Definitely not coffee. If any of these get to serve alcohol through the drive-through, it's over. Like Katie Bar, the over, right? It's done. But Dutch Brothers, the double drive-through, they can just hump out incredibly profit margined items one after the other.
Here's to me, it was interesting. Like it opened at 32, Bob, last Thursday quietly. Like you could have, I mean, that's been the low. Like you could have bought it when it came public and doubled your money in 3 days. So, and you know, I think that was that was to me a smart trade because as we talked about at that point, it was maybe worth 800, 900 million. Now it's a, $1.6 billion a market cap. But guess what? Starbucks is 135 billion, Bob. Nothing but upside.
Yeah, and they're
exactly.
You don't get out of your car at a Dutch Brothers. They're all drive-throughs, correct?
And they're all drive-throughs. Well, they got a couple cafes where you can actually sit outside and that type of thing. But it's kind of like the In-N-Out model. Most people go drive-through anyways. So they do have an inside-outside, but mostly outside is what Dutch Bros has. And again, it's the sugar, Bob. It's not even the caffeine. Like if I don't go there that often, but when I go, I get the most sugary caramelized iced coffee thing, and it's like a milkshake. I mean, I just feel horrible after drinking that stuff, but the kids love it. And guess what?
Addiction,
the youth is
that's another great business model. Addiction.
Yep. And so I think if you could get a pullback, honestly, if you can pick this up around 40, I'd probably buy it, start nibbling in it. But whatever, we're 4 or 5 days into it. Hit 60 yesterday, so you had a double, hit 62 or so. But I agree. Fundamentally, the story has nothing but upside. They're only really in 4 or 5 states, and mostly in Oregon. They're a little bit in Arizona, a little bit in California, but they're just not everywhere. So, I mean, you think about places like Chicago and Detroit, where everybody's just in their cars driving all the time. These places are perfect. They're perfect. They're easy. Yeah. They're cheap to throw up. I mean, they're literally, what would you call them? They're the shacks that people buy at Home Depot. The little back shed.
Exactly. With a window on each side, they get the two-way drive-through going. It's brilliant.
I mean, you can open one of those for 10 grand and just, and you rent somebody's parking lot that nobody was going to anyways, right? It was a dead building. Like the play is brilliant because all of a sudden you're going to make that property worth something too. So I think there's a real estate component too. Again, I don't know whether they're franchising, because they kind of had. I mean, I know the person who started it in Central Oregon, and now there's like 15 of them, right? So I'm not sure what the model is. I haven't read it. I haven't read, when it came public, I didn't read the S1. I'm just a consumer of the product. So, but yeah, it's an interesting story. Very interesting, Bob.
All right, beautiful. We will be back at it daily. Please visit us at marketvitals.io. Please, please, please share the broadcast far and wide with your relatives, dead or alive. We don't care. Matt, thank you so much. Enjoy your afternoon. And
I'm happy to see you back. Happy to
Right
see
on.
that.
I'm ready. Tomorrow I'm going to be shaved. I'm going to start pulling all the strings together. I hope.
All right.
Anyway,
I hope to. You look
always
good,
a pleasure, Matt.
You look refreshed.
Oh, wait. And by the way, the podcast now up and available at backyardbend.com. Finally, Matt, we actually took vacation because they couldn't get it up. No, we didn't. Anyway, but it is backyardbend.com. We're getting places. We're getting distribution. Next comes moolah, maybe. Anyway, Matt, have a great day.